Shares of EV maker Rivian deep in the red this morning. This after the company reported fourth quarter results. And Phil LeBeau joins us now with the company's CEO. Phil.
Thank you, Andrew. Let's bring in RJ Scaringe. RJ, it was a rough report for you guys. Let's be blunt. Plus, you announced 10% of your salaried workforce is going to be laid off as you guys are cutting your costs. I'm curious, in a general sense, how much has the EV market slowed down in the last 3 months?
Yeah, I mean, we've seen historically high interest rates, and we've, along with a lot of the geopolitical uncertainty, particularly for higher-priced products, you know, in the premium segment, we're seeing the effect of interest rates, the effect of uncertainty. Yeah, our flagship products, the R1T and the R1S, they were the best-selling vehicles of the last 2 quarters, over $70,000 in the United States.
Now,
so you're starting to see a lot of them on the road. It's super exciting. My kids love it. Every time they see them, they point it out, and now it's every time we drive somewhere, we're pointing out a lot of cars.
Well, a huge move, John, and that's because Rivian announcing, along with Volkswagen, that Volkswagen will be investing $5 billion in Rivian. This will happen in 3 tranches, an immediate tranche of $1 billion in unsecured convertible notes, with a bunch of conditions that are kicking in terms of the ultimate stock price that it converts into later this year, then $1 billion in 25 and $1 billion in 26. When it's all said and done by the end of 26, back of the envelope math, it looks like Volkswagen will probably own 10 to 15% of Rivian.
Germany's Volkswagen says it will work together with U.S. auto startup Rivian to develop software for its cars. Volkswagen is set to invest up to $5 billion into a joint venture with Rivian.
Rivian stock went up more than 30% after the announcement of its joint venture with Volkswagen. However, year to date, Rivian stock is still 42% down. The company has never been profitable since it was launched in 2009. And in addition to that, in quarter 1 2024, Rivian lost $1.4 billion. Does this new joint venture change everything for Rivian? Does this company suddenly become a good buy for, the investors? So stay tuned to know all the answers regarding this. You saw this news. What was your first thought?
Yeah, my first thought was that, well, traditional car manufacturers are having issues producing EVs. They are not really having the best of success, either in Europe, in US, or even in China. In China, they are even getting decimated. But even here in the US, they are finding it very hard to compete with Tesla and the other small brands. So what I feel Volkswagen is doing here is to find partnership or buying equity in a smaller company and maybe compete that way, because it's like they are realizing we cannot compete in this new age. So let's leave it to people who are, better at this, and let's leave it to them and let them figure it out. One of the things that were mentioned on the news about this deal, Volkswagen is going to get access to Rivian software. If you know anything about electric vehicles, is pack a lot of electronics, a lot of software as well. For example, Tesla, most of the updates for car itself can be done over the air, meaning over the internet, and the operating system of the car gets updated like that. So even to fix sometimes the brakes misbehaving or the windows misbehaving, you just need to issue a software update. Traditional car manufacturers cannot do that. They don't know how to do that stuff. So they are finding it very, very difficult to compete. This is one of the reasons for this deal. But again, there is more for Rivian than for Volkswagen, or maybe it's balanced, but we'll talk about it. If you like this type of video, please, we do put a lot of time in researching these videos. If you like this type of video, please remember to subscribe, share, and comment.
Thank you for that. And also tell us what you think of Rivian in the comments. We want to know. But yeah, I mean, in terms of, the nature of the joint venture, right? A lot of people just saw the news, but they don't actually know what's happening. But let me just break it down really quickly. So what Volkswagen is doing is putting $5 billion into Rivian, and they are doing it this way. So first, Rivian is getting $1 billion in convertible notes, meaning it's going to be a debt, and then it turned into like a stock option into Rivian stock. And then in 2025, Rivian will get again 1 billion. 2026, another billion. And then when the joint venture is set up, they will get 2 billion. So that's it. That's the 5 billion that they are getting. And as Adair said, it's all about software and then electrical architecture. So that's what Volkswagen is after. So in terms of Rivian, what is Rivian getting out of this? I think looking at their financial will give us like an amazing answer to this. So let me quickly share my screen and then just show you this. Okay, so first let's start with Rivian's car deliveries and then their revenue. So these are their quarter one deliveries numbers. So comparing 2024 quarter one and 2023 quarter one. So on the left side, you can see that the deliveries went up by 71%. And in quarter one 2024, they delivered around 30,000 units, or 30,000 cars, 30,600 to be exact. And in terms of revenue, the same thing. Their revenue jumped by 80%, while the delivery of the car jumped by 71%. So here you see it, you be like, good, everything is going well. I would say you need to take a step back to kind of see the whole thing in terms of like the market view. And when you look at Rivian and compare it to Tesla, in quarter one 2024, Tesla delivered around 390k. So here we are comparing 390k versus 14k. So Rivian is like a very, very, very small player. And in terms of market share in the US, their market share is less than 5%. So that's very, very, very small in the EV space. Any thought there?
Yeah, I want to put this into perspective. As you can see here, I'm taking a step back even further, right, in the past. That means last year. If you look at this chart, this is the delivery of electrical vehicles in 2023 by brand. And what you see here is that Tesla is really beating everyone else. Tesla delivered basically 660,000 cars in 2023, and it followed by Ford, which delivered about 72,000, Chevy 62,000, Volkswagen here we go, 37,000, Hyundai 46, and Rivian. So if you look at this in chart format, you can see the discrepancy is huge. But if you take out Tesla out of this, Rivian has a place in this battle, right? Because by delivery numbers alone, we can see Rivian can be approximately number 3 in this battle, right? So Rivian, I would say, has a good footing as far as people who can have the chance to compete against Tesla. Not compete, just have the chance to compete against Tesla. So it's a viable option in the EV marketplace.
Okay. Based on that data that you show, I'm going to ask you one question. Why do you think Volkswagen chose Rivian instead of Tesla?
First, Tesla is too big. If we are just going to talk about market cap, you have to put together a lot of car manufacturers just to make the market cap of Tesla alone. Tesla ultimately wants to destroy all these competitors, right? Second, Rivian is already beating Volkswagen by car delivery numbers. Rivian is kind of starting from scratch. So basically building manufacturing by imitating what Tesla has already done. And I believe this is why Volkswagen is picking Rivian, because it's doing or is copying Tesla as far as operation is concerned. It's copying Tesla, and the other traditional manufacturers cannot do that.
They are picking Rivian because of 3 main reasons. The first one is because of control. Basically, what they are trying to do is, in this joint venture or M&A, you want to have a lot of control on the other party, or you at least want someone that is a company that is going to be with whom you are going to be like on the same kind of thinking, and one party is not just going to go rogue on some ideas and be focused on other things. And this goes back to Elon Musk, because Elon Musk is a character that's very difficult to control,
right? And
they don't want that. So that's the first reason, according to me.
Okay.
And the second one would be around regulation. So we remember that a few M&As were blocked this year. Amazon and what's the name? iRobot, many other, Figma and Adobe.
Yep.
So I think even a joint venture of these two giants, the regulators wouldn't have liked that. And the third one, I believe, the one that you mentioned about the tech. So their tech is not too far behind Tesla, right? On my side, that's what I have as a reason.
I think this is the kind of think the regulator might be behind, to be honest with you, just because the way China is really, really competing with the whole world basically on EV cars. I think more of this is going to happen in the future where consolidation is going to happen. I don't know exactly how, but if there are other smaller startups that have good numbers, just like Rivian, they might get swallowed up by these traditional manufacturers.
I totally agree on that, and I would even say that EU and
The
the
US.
US now, they are playing like the Avengers, where
Right.
the FBI or the CIA is getting everybody together, figure something out, guys. We need to
Right.
figure something else to kind of beat the Thanos,
Right.
who is the big Chinese ball. Yeah, so these are Rivian's gross profit and their free cash flow. And here you can see that the company is real deep shit. Because in Q1 2023, their gross profit was $500 million. You can see that on the left side. And it was the same amount in 2024, Q1 2024. But there was a huge progress in terms of this, because it went from 81%, so 81% of their revenue, to 44%, I mean minus 44%, which is very bad. And in terms of their free cash flow, it was 1.8 billion, which is a lot. Free cash flow is basically, if you take the money that a company gets in terms of revenue, you take all the direct cost of cost of goods sold, you take it out, and then after that you take the capex. This is what you get, and it means this company is not sustainable. Basically, like, they are spending so much money, and that's crazy. Any thought?
Yeah, this is our research tool called Charlie AI. You can access it at askcharlie.ai. Just going through their 10Q, their latest 10Q from May 2024, you see that Rivian is losing a lot of money every quarter. They are burning about 1.5 billion per quarter. That is a lot of money to be burning and not actually making any net income on the revenue they are generating, right? So they are actually burning more money than they are generating revenue. Again, I don't know why this company is public. This company should be private and be losing this kind of money. But hey, it is what it is. They delivered about 5,642 vehicles this quarter. And because this program that we use for research is using AI, is able to scan this document and tell us exactly, based on the numbers that we asked it previously, how much the company is spending, how much cash are they losing. I asked the AI to tell me how many quarters does Rivian left just based on the cash they have on hand. And literally, based on the numbers, Rivian has only 3.2 quarters. So basically just 4 quarters, 1 year left of cash that they have on hand based on how much they are burning every quarter. And this is why it makes so much sense for them to take in more investment.
But wait, if you think about it, that's actually really good. I mean, when I was going through their financials as well, I noticed that they have quite a lot of cash on their balance sheet, and that's actually really good. If you were to, that's like one of the main rules of Bill Gates. He always wants Microsoft to have at least 1 year of cash that can go toward paying everyone and surviving for like a year. And most companies are actually on the S&P 500, I believe, don't even have that. Like, especially the kind of new ones that just went to market, they don't even have that. But
well, that is true, right? That is true. It's good to have a lot of cash. Nobody's disputing that. But if you are losing it at that same rate and your run rate is 1 year, imagine, let's just put it in perspective, that the Federal Reserve increase the interest rate a little bit more. Maybe by the end of the year, this company will be toast. Because already, if you look at the information or the reason they are citing for making less money or preventing the company for generating more income, one of the things they mention is that economic and geopolitical condition affecting consumer confidence. That's one of the reasons. This, although it's a summary, basically is referring to, you have to know that people are not buying cars all cash, right? They are usually bought on some kind of loan with some kind of interest rate. And interest rates are very high right now, which is preventing a lot of manufacturers from selling cars, not just EVs. Everybody is having a hard time selling cars. When you are spending this kind of money and you can't sell your product and you only have 1 year to go, I don't think this is a good thing.
Let's jump into kind of another question. So in terms of Rivian, what do you think this joint venture mean for them? I mean, in terms of like, what are they going to benefit from it, and what does it mean for them?
Yeah, for me, the way I see it is that this is Volkswagen ensuring to still have place in this race. They have lost this race completely in China. If you've seen some of the videos, Chinese don't really like the Volkswagen electric cars. There are a lot of videos online about Chinese mocking the Volkswagen EVs because they are not up to par with the Chinese competitors. Tesla has taken this market by storm already. Almost no manufacturer can compete with it. Volkswagen needs to have a way to still stay in the race. This is their way of doing that. It's gonna give them a way to compete as well. And by having equity in this car, maybe they ultimately, if this doesn't work out, because you have to remember 5 billion is just 5 quarters or less for Rivian. If this doesn't work out, there is still the option for a manufacturer to buy Rivian in totality, or Volkswagen, partnering with another manufacturer to buy Rivian in totality. So these are still options for Rivian.
I see your point. On my side, what I will say is that some of my point goes kind of agree with yours. The first thing is the lack of capital on the Rivian side. So this is going to basically kind of save Rivian capital wise. This is like a capital that they need for growth. Mainly because they had to delay their plant in Georgia and use, their current plant in Illinois to build their R2. So they don't have cash to build another plant basically, and they are basically struggling. And also, before this partnership, this one is a good news. Rivian also announced that they managed to reduce their cost of manufacturing by 35%, which is a lot. Because of this, they are likely to be profitable. And what they are planning is that by the end of the year, they are going to have a positive gross margin. So the big gross margin of 0.5 billion that we showed you before, they are expecting those to disappear by the end of the year, which is a very, very, very good thing. And you add partnership on top of that could be really, really good. The benefit in terms of operations, so lower cost of production because the scale, now they are going to have a bigger scales. They are going to leverage, the speed as well, speed and innovation, thanks to the resources that they are going to kind of have access to, not just money, but resources in terms of like Volkswagen's distribution channel and, marketing, Volkswagen's know-how and all those things. Because when you talk about Volkswagen, it's not just Volkswagen, it's basically Audi, Porsche, Lamborghini, Bentley, Bugatti, all those cars. So it's a lot of things. And what analysts have been saying about this deal actually is that for them, they are now raising Rivian's kind of stock price to $20. So the guys at Wedge-Rush Securities are saying that the new guidance is around $20, and that's how they see this thing going forward, and they expect this to really help the company in terms of launching their R2 that's coming up very, very soon. I think in 2026, I believe. And for them, this is going to really change the story on Wall Street. And everything is about story regarding these companies, the story that the CEO is going to be telling. On the regulatory side, do you think they are going to validate this? I mean, we talked a little bit about it, but what's your definite answer? Yes or no?
Yeah, I think they will. They don't have a choice now. Like the whole industry is threatened by China, so they don't have a choice. China is suffocating them. Outside of the US, in the next 5 years, either Europe or US are going to have a very difficult time selling any car at all. Whether it's, ICE car or EV, it's going to be very difficult. So that's China's plan. So the US and the Europe needs to consolidate and really, really fight and compete with China, like really aggressively. And that's why I think regulators are going to go for this. And I'm really looking forward to it. And I also want to mention that we did say a lot of negative things about Rivian, but I'm actually a big fan of Rivian. I bought the stock way back when it was at the lowest. And I also bought it when this was announced. Although it went down, I'm still up because I bought it when it was like, when nobody was talking about Rivian, right? So I'm a very big fan of the cars. Their car looks really, really nice. And I think they have a place in this market. We should not let Rivian die.
That's a good one. The impact of this on the AV industry. Do you have any thought? I have mine. I mean, I can start with mine. So basically, we all know that now we are in like a very kind of slow adoption EV market type, right? Because there is a lack of infrastructure in many of these countries, especially in the US. And, all these owners actually have, it's actually a new disease now. So they call it
the
stress.
range anxiety.
Range anxiety, they call it range anxiety, which is very, very strange. And based on the new research that McKinsey did, 46% of US EV owners are planning to go back to ICE. And this is a very recent study. It was done this year. The impact of this whole thing on, the industry for me is that Tesla needs to buckle up and, put its act together. Otherwise, there is competition. Besides Chinese, even in the US, there is competition coming. They better release their Tesla Model 2 or find something
very soon.
Find something. Otherwise, it's going to be very, very bad for them. You say you own the stock. I was going to ask you final question. Is he a buy for you or not?
I think this is how I look at this company. To me, Rivian is like Tesla maybe 6 years ago, right? When Tesla was struggling, was trying to figure things out, the stock will go up, the stock will go down. This is the same for me. Again, this is not financial advice, but to me, is a bet. You can either lose all your money or make a lot of money. That's how I look at it. So
Guys,
just based on
please
this,
don't follow this guy.
Exactly. Don't follow my advice. Is a 50-50 thing, So for me, I'm betting that, Rivian some way, somehow is going to be number 2 to Tesla. That's what I believe. But again, this is not based on any hard data. Okay, the hard data, yes, the hard data is telling us that Rivian is not doing well. Yeah. But when you are investing for a long term, you have to see beyond the data as well. You have to see the vision. You have to see what is happening on the ground. And we can see that there is a lot of adoption with Rivian. With everything that Elon Musk is doing, a lot of people are being turned off by Tesla. And there are some of them who are considering to buy Tesla are buying Rivian. Here in Massachusetts, you see Rivian all over the place. So this is why I believe that the Rivian, I'm not 100% positive that they are going to win, but they have a chance.
Okay, got you. I think my answer is completely different from
all right.
So basically what I'm going to say is that Rivian, me personally, I wanted to buy the stock, and today I almost bought it, actually, to be honest with you guys. But I had some self-control, and I didn't do anything. And I believe that this is not the right time. You need to wait just a little bit, maybe 1 or 2 quarters, to see improvement in terms of their gross margin. If the gross margin becomes positive, I would buy. Otherwise, I will stay far away from it. So that's
fair enough. All right, we've reached the end of our video. If you like this type of content, again, remember to subscribe and share the video. And also don't forget to comment and give us your thoughts about what we just discussed. Thank you.
Okay, guys. We've been working very hard on this AI-backed platform that enables individual and professional investors to query 10K, 10Q, and earning call reports. And this platform is set to revolutionize the way you invest in stock, as it is going to enhance your efficiency thanks to the AI that will quickly process and analyze the vast amount of data in these financial reports, and also highlights the trends, enabling you to make a better decision regarding your investment. And as a matter of fact, all the insight you will see in this video was gotten from this platform. So currently the platform is at a beta version, and we are looking for investors to try it for free and provide us with feedback. So if you are interested, please subscribe to our Substack. The link is in the description, and thank you very much.